All right, guys, back to work tonight. You're still with me here, right? I know, that daylight savings time change, it catches up to all of us at some point that following week, doesn't it? But welcome back. Welcome back. Glad to see you're still kicking here with me here this week. It's Tuesday evening already. It's the 9th of November, 2021. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades, setting up for not just any Wednesday. Got some CPI report tomorrow. Got the last day of the week before the holiday on Thursday. Got a big day coming. Tomorrow's a pretty big Wednesday trading session. Probably one of the biggest Wednesdays of the month of November. So got a lot to cover here tonight on this video tonight. Got a lot of great trades setting up for tomorrow. We can definitely tell there's some big news coming tomorrow. Got some ranges on the E-minis. Got a nice strong trend on the oil. So we're looking for pullback trades, maybe some reversals here tomorrow, some range breakouts. Boy, a lot of great trades setting up on our radar for tomorrow. I'm going to cover all my favorite trades in tonight's video. You'll also know some stuff to stay out of trouble tomorrow, right? Just in case you're trading on your own or if you're trading with us tomorrow in our trade room. As always, before we jump in and kick this party into gear tonight, make sure you subscribe to our YouTube channel. A lot of this is time sensitive, right? This information tonight. So make sure you hit that bell icon so you always get notified when I upload something new. If you have any questions for me, drop those questions in the comments section. Would love to answer any questions that you might have along the way. And if you enjoy this video as much as I enjoy making it, do me a favor, hit that like button, that thumbs up here. I always appreciate you guys carving some time out tonight on this video. But let's not spend too much time on the intro though. Time is ticking. I'm a little bit late on the video tonight, so I appreciate you guys sticking around. Let's get ready for Wednesday. We got big news tomorrow, and again, bunch of scarcity tomorrow because Thursday, of course, is Veterans Day, right? Okay, so S&P, Nasdaq, oil. Everything's all set up and ready to go here for tomorrow's trading session. Got a bunch of ranges still on the S&P and the NASDAQ. They are very similar. One big difference, though, right now is got a wedge on the NASDAQ. Wedges are really powerful patterns. We'll talk about why I mentioned that. And we get a spiking channel on the S&P. So got some ranges, got some spiking channels, got some spiking wedges. We'd love to short those pops on the S&P, short those breakouts, right? NASDAQ, short those pops, right? Shorten breakouts here. With some big news tomorrow, you need to be prepared for a possible reversal because we get some big news tomorrow morning at 8:30 Eastern time. So I've definitely got some reversal trades to make sure you guys are watching for tomorrow as well. So looking to short the bounces, short the breaks down tomorrow, and possibly, depending on the market reacts to that news tomorrow morning, possibly a reversal, and we get some key setups for the buy side on the S&P and the NASDAQ as well. How about some oil? Oil, you can see a nice strong trend, no doubt about direction on the oil. They got that 10-year high up there, only a little bit further up. A lot of momentum right now for the bulls. There are really three types of pullbacks that you want to be ready for on oil for tomorrow. Three types of pullbacks, and then one bonus we're going to talk about tonight on this video. Obviously, we want to be a buyer when the market is this bullish. We get a big range down here, though. There's a big range down there, and as always, I'm going to make sure we know how to trade a reversal off the high, right, and everything in between. So not to worry. I'm going to make sure you guys know all the best setups I'm tracking for tomorrow and tomorrow's trading session. Speaking of tomorrow, though, I've mentioned a bunch of news here so far in this video. What do we got coming out tomorrow here? Got some big news tomorrow. The big news tomorrow, of course, for pretty much everybody is going to be that CPI report at 8:30 Eastern time. We do have the jobless claims number at 8:30, but that will definitely not be the most important news tomorrow. 8:30, that CPI report is definitely going to be most likely the big news of the day. On the oil, of course, if you're an oil trader like we are, right, you've got that petroleum status report, the weekly inventory report at 10:30 Eastern time. So these are the big news reports for tomorrow. Again, the big report is that CPI report at 8:30 Eastern time. And I'm going to do my best tonight to give us some good setups to look for tomorrow, but I've got to warn you, this is one of the biggest news reports we're getting right now because of the inflation aspect and the Fed's obsession with inflation and, of course, the market's obsession with the Fed. So I'm going to do my best tonight to kind of get the charts all prepped up and talk about what we're looking for tomorrow. But be aware, if that number comes out really high or really, really low, that we may see the market kind of break, right, and kind of do its own thing tomorrow. So, I always hate to leave you guys hanging there, but we'll have to kind of play it by ear once we see how the market reacts to that CPI report. I would imagine, just kind of an assumption, if that CPI report came in relatively low tomorrow, it may be seen as very good news for the markets because, of course, it would probably signal that the Fed wouldn't be as aggressive at raising rates and slowing down this economy, right? That would be kind of my initial speculation. A lower than expected number tomorrow will be seen as a very good thing for most likely all three of these markets. We'll have to wait and see, as always, how the market reacts to it. If there's one possible scenario where we might have everything technical set up tonight, but then tomorrow, this comes out and surprise the markets, really freak out. This definitely could break these markets, and we may see something completely new that develops for tomorrow's, right? So I don't want to spoil the charts tonight, but be aware of that. There is that potential for tomorrow because it's such a highly anticipated news report. Then again, we've got the petroleum status report at 10:30 Eastern time. I always give it a 15-minute buffer, right? So 15 minutes before, 15 minutes after. If you're an oil trader tomorrow, it's before 10:15 or after 10:40. 10:45. That'd be when you want to be trading on the oil market. And obviously tomorrow morning, 8 o'clock Eastern time, don't forget, we're going to be trading this stuff tomorrow morning, every morning, Monday through Friday, in our trade room. We open up at 8 o'clock. I'll put all the membership details, the description of this YouTube video, or grab the big button for me right below me tonight on the website, and I'll see you tomorrow morning at 8 o'clock Eastern time in the trade room. Back to our charts here for tonight. S&P, Nasdaq, oil. Glad to see everything is all set. Glad to see you are here with me as well. I know this time of the week is always difficult after a time change over the weekend, right? It seems so easy the first couple of days, and then you get into that third day afterwards, you're like, oh boy, that sleep is catching up to us now. Bottom line, let's grab a look at charts here for tonight. Got a lot of good trades on our radar here. What's the most important factor here on the S&P going into tomorrow? I think there are two kind of key components. One, of course, is this range. It is a bear market into a trading range. This basically tells us, because we know that ranges act like magnets, it basically tells us that sellers are likely going to be looking for shorts off levels of resistance, such as expanding trend lines, right? Things like that off the highs. It also tells that sellers will be looking for breakouts going lower. And this is, of course, one big difference between the S&P and the Nasdaq. The S&P has a channel, the Nasdaq more of a wedge. And we'll talk about kind of how the breakout will be a little bit different in the Nasdaq here. So make sure you stay tuned for more as we go through, kind of further into this video here tonight. But those are pretty much, the idea for the bears here right now, right? We want to sell it as it goes higher, use levels of resistance overhead, use that range as the magnet. And then, of course, if we go lower, we're going to wait for, I've got 4 different breakout patterns we'll talk about throughout the video here tonight. Get some breakout setups we're looking for as we go lower here. The bears would love to get, there's a big wide open space down here. There's a big range down here from last week, right? What is that? What is that from? Yeah, from the 3rd, right? So yeah, that's last week. Look at that big wide open space right there on the S&P, right? Last week had that big melt up last week. So there's plenty of open space down here for this thing to run if it does start to push through here. So how do we sell it as it goes higher? What do the buyers want to do right now, by the way? The buyers, of course, right, because this is a range, the buyers, of course, will be looking for longs off the low of the range, because after all, the range is a magnet. The buyers will also be looking for, possibly in this situation, a 1, a 2, and a possible reversal going higher. Now, that reversal going higher, we've got that range up there, around, let's say, 4,700 up there. That'd be an easy magnet. And, of course, there's your all-time highs right up overhead. So buyers definitely have to be careful right now because they don't have the momentum on their side right now. Buyers definitely have to be careful here. Sellers really have, as you can see, all of the momentum right now. Got some notes here in the chart. As the market pops higher here, right? As the market goes higher, a couple things I'm thinking about here to short this thing. Now, of course, the one thing about this market pushing higher right now is going to be momentum. Right? We're rotating off the low. So if we do end up pushing higher here, what you're going to want to see is pretty much what we got earlier on in the session. We go up, the buyers try once, the buyers try twice, and it falls right back down. And same idea, right? Same idea. So again, find some areas of resistance. Find some areas of resistance. I really, really like this whole area up here, right? This, 85 down to 80 area. And then once we get this thing up, the key is going to be to rope in some of those, right? Basically some of those buyers, right? Let those buyers try once, let them try twice. All their stops now are sitting right below that low, and we can literally sell right into those stop losses. That'll be a failure pattern. And again, it could come off this trend line, it could come off this swing. It's going to be up in this area, up above the top of that trading range. Now, one thing you want to kind of be aware of this is let's say, for example, we pop up and we come right back down, one try and then two try. Do I want to sell down there? Probably not, right? I get that trend line coming in. So in that situation, you want to make sure you grab a trap entry off of that high, right? Does that make sense? Why the trap? The trap because of this rising support trend line. Why the two tries? Because of the momentum as we swing off of that low, right? One of my favorite tricks is to draw a trend line off of those lows, bring it up around that high. Makes for a fantastic way to short that two try failure pattern coming in off of that high. Now, as we go higher, at what point could I buy this market as it goes higher? Well, they have to hold the pullback. They got to hold the pullback. Remember, it doesn't matter how strong the initial leg is, right? As we saw back here, pretty strong leg, right? But they got to hold that pullback and keep it going. If we can get, and again, it may end up being something like this, where it comes off of that rising support trend line. If we weren't so bearish already, I would say look for the long right off that trend line, but it's just, you're playing with fire, because at that point, we're not bullish yet. We're still very bearish. A lot of times you'll see a good entry here and it will just kind of fall over, and just because it's so bearish right now. So really want to be safe. Wait for that 1, 2, 3 reversal. That's the key right now. Again, remember, it doesn't matter how strong the first leg is. Okay, and it might come off that trend line. It might not. Just be aware of that, right? It may just go like this. Strong move up, right? Pull back, and then hold that pullback. If that's the case, right, what we do is, again, imagine now we come off that trend line here. We get this strong pop up, right? We get that moving average coming over. The buyers come in, they hold the pullback, and they jump off the moving average. That we call those 1, 2, 3 reversal patterns, right? 1, 2, 3 reversals. Now, once I have that 1, 2, 3, now I can structure it to find the channel. Okay, find that new channel off the high, and then this is a 5,000 tick chart. Keep in mind on that. We're going to drill down to our faster time frame, and on the faster time frame, we'll look for the entry. My two favorite entries off the low of that channel are traps and failure setups. Right. What oftentimes happens is we'll go running higher here. The market will kind of punch higher. Right. We'll get that little trap. Right. Little trap into a failure, into a pullback combination. We oftentimes see quite a few entry signals off that first pullback, right? So if you were to zoom in on that area, right, get your trap, your failure, your pullback. Now, obviously, I'm simply drawing the screen right now. I have a lot more examples of these trap, failure, pullback combinations. I got hundreds of examples of those, all part of our free quick start class. I know a lot of you guys have already grabbed it already, so I don't want to be a broken record here. But if you're new here to the channel right now and you haven't grabbed that class yet, it's a free quick start course. And just like it sounds, right, it'll bring you right up to speed with how we trade in our trade room, how we trade ranges, how we trade trends, most importantly, how we find the right levels of support and resistance and qualify the entries properly, right? So that is one of the reversal setups, one of the breakout setups, right? I'll look for as we go higher. I have a couple more of these that I want to share with you, right? So we'll talk more about that, but that will be a breakout setup, right, as we go lower or as we go higher. As we go lower here, what are my options right now to buy it and my options right now to sell it? Well, let's talk about that. As we go lower, you know the bears want to get back and retest that low. We know this range above us is a magnet. Can I just buy it going right back in? Why not? Why not? Well, momentum, right? Remember, there's two questions you always want to ask. How is my location and how is my momentum? Location down here is great, right? I'd love to buy the low with the range above me. Location is primo. The problem is momentum. So what you want to do is, if we take out that low, look what happened back here, right? Look what happened back here. So we take the low out, see the bears try once, the bears try twice, and then it makes that turn. Same idea. Right? Same idea. Strong move down, bears try once, bears try twice, and it makes that turn. Same idea. We take out that low. I'm not going to buy it right away. Too much momentum. Wait for the bears trying once. Wait for the bears trying twice. One of my favorite entries, you can kind of see it right here, right? Bears try once, bears try twice. Little trap right there, right? Little trap entry, little trap below that low. That's a great option as well. All right, but the bottom line is I'm waiting for the bears to try a couple times down here, and then I know exactly where their stops are. They're right above that high. Now, remember, if we were to get that move lower, get the bears trying once, get the bears trying twice, right? Stops above those highs here. You want to try to avoid that trading range. So if the market was to go higher, what you want to do is take that order, put it right underneath that trading range, right? It'll almost always come right back to get you in, right? So try to stay out of the middle of that, right, of that trading range. You'll see they'll kind of pick off those bottoms, right? Just out of that trading range. That's how you want to buy it off of the low. How do we sell it as it's going lower? Well, we talked about that 1, 2, 3 breakout, right? That was the first one we talked about going higher. So 1, 2, 3 breakout, mark up that low, mark up that high. I don't care where I am, by the way, at that point, guys. I don't care where I am. I will look for that first test off the high of that channel. It's a 1, 2, 3 breakdown. All of that momentum at that point, I'm going to drill down to my faster time frame and grab that short, whichever entry setup that we get. And again, you'll see more examples of those entry setups in that free quick start class. What else could I trade down here? How about one more breakout pattern? Another breakout pattern would be a 2 try breakout. Let's say for example, the market really starts to accelerate here overnight. We see a real strong move down. We see a shallow pullback, right? Barely comes back to touch the moving average and a lower low in price. When that happens, that's the money trade right there, right? That's the 2 try breakout pattern. And as I always tell you, right, it's a strong initial leg, shallow pullback, in this case lower low in price. Everybody's going to be dreaming about the entry above that high. And remember, you can really increase your odds of success if you can draw a new channel off of that low up around that high. You don't need the channel, but sure as heck, it doesn't hurt. It definitely doesn't hurt. So we'll always look at those channels here as we go. That's a second breakout pattern. I got a couple more, right? We'll talk more about the breakouts on the NASDAQ, right? So 1, 2, 3 breakout pattern. A 2 try breakout pattern. Make sure you keep on watching because we're going to cover more here as we go. Again, it's a big, wide open space. One thing you want to remember if we do get this move going lower is the breakout leg is the measuring leg. Okay, the breakout leg. It's the range right now. So once we see that first kind of impulse leg that leaves the range, make note of that because that's going to be now kind of where that next objective is going to be, right? The breakout leg is the measuring leg. Think A, B, C, D, right? Pretty simple, right? Pretty simple there. All right, we're looking pretty good on that. That covers the buy side. That covers the sell side. There's a couple more breakout patterns. Let me show you those on the NASDAQ, right? NASDAQ, of course, is up next. NASDAQ is very similar to the S&P, except one really key difference, and that is the wedge, right? The wedge. So we're definitely bearish. You know, anytime we see a strong move in one direction, we almost always see a retest of that, right, of that area. So we're kind of sitting right here now, kind of treading water at these lows. I would definitely say there's a wedge on this chart. Wedges are pretty important because one thing about wedges is that when they're wide, you can trade inside of them. When they start to get really narrow like this, obviously there's not a lot of space in there to get any real meat on the bone anymore, and the market will oftentimes pop back up and then come right back down in. So that's one kind of key component of a wedge, right? We know that when it's wide like this, we can trade inside of it. Once we start getting down into the vertex of that wedge and it really starts to consolidate down here, right? Pop up and then short it back down. Second thing you want to keep in mind is that the vertex of that wedge is a very strong, oftentimes very difficult to break through support level. Right? It will oftentimes be very difficult to break through. In fact, you can see on the chart right now, it was a range here. We may end up going into a range here. So I do want to make sure we talk about that for tomorrow, because we may end up seeing a range down there and end up having to short that pop as we go. So I really like that clue here on this chart. And of course you can see the range. Right? There was a range here. They moved it lower, right? And again, I wouldn't be surprised, just kind of knowing how wedges work, wouldn't be surprised if they move it a little bit lower here into that 16,160 area. Right now, bears have control, so it's very similar for the S&P. The bears would love to short, right? Use these ranges as magnets, find levels of resistance, right, up overhead. I really like how this kind of underbelly of that range, I wouldn't be surprised if this thing was to really bounce hard and then end up coming right back down there for tomorrow. We'll talk about kind of how we want to trade that here for tomorrow. So definitely want to short this thing as it pops up, and then as it goes lower, we just got to make sure we really get a very convincing break below that 16,160 area. So definitely have plenty of options in the NASDAQ. The Bears would love to go back and take another bite out of that 16,000 big round number down. There's a big, remember this whole, look at that chart, right? There's a whole move up, right? That whole move up there from last week could easily evaporate if these bears have their way. And of course, the buyers would love to go back up and take out some of this 1380, 13,400 back into that range above us. Because again, ranges, they love to act like magnets. You get the all-time highs up there at 16,440. So as we go lower, how do we trade it? How do we trade this thing? It will be similar to the S&P in a couple ways, right? One, of course, would be that pop-up, right? As we pop up now, there's going to be that little bit of trend line here. So again, I want to see one, I want to see two, and that short, right, back down again. We can see it right here, right? Strong move down, pop up, buyers one, buyers two, back down, right? They go from there. So keep that on your radar with those 1-2 try failure patterns. And again, as I mentioned earlier, because we have potentially, if they just kind of bounce and go higher here, if it ends up being something like this where it's like 1, 2, right? You're not going to want to sell into that. You want to look for that trap above that high, traps, because traps will help you avoid that rising support, right? That rising support. We go up, right? The buyers once, the buyers twice, get that, right? Get that trap. Of course, everybody wants to short that trap because that's where the good stuff is, right? That's the highest price you're going to get for that, right? For that short, you make your money when you sell, right? And getting a good entry price on it. So that same idea here, right? As we go, keep in mind, right? Keep in mind too, if the market was to pop, we talked about the 1, 2, 3 breakout on the S&P. We talked about the one shallow pullback higher high. We talked about that, right? 2 try trap or 2 try breakout on the S&P. Those will apply as we go higher. Another one, right? Another one, of course, as we go higher here. Again, we know kind of where that major objective is. If we were to pop up and start to grind, right? Pop up and start to grind. If we pop and start to grind, which could easily happen, guys, because of a short squeeze. The bear, remember, we got news tomorrow morning. Shorts get squeezed. The market pops up. The bears who got short over here, they're getting out. The market grinds higher, right? Grinds higher, grinds higher. Now, what do we do in that situation? We mark up a trend line off that high. We mark up off that low, right? And the money is the trap, right? The trap off the low. And I talked about this briefly before, right? The trap, the failure, the pullback, etc. So if it really starts again, if it pops up, and then, sometimes it pops up, pulls back and goes, right? That's your 1, 2, 3 breakout. If it pops up, gives that shallow pullback and then doesn't trap, right? No trap, that'd be your 2 try trap there. Again, if it pops up, it starts to grind. Yeah, that's your entry off the low of that channel, your failure, and that pullback as we go. And then remember the size of the breakout leg. Make note of that leg, because that's going to tell you now kind of where that next big objective is as we go higher. Does that make sense? Right? So remember to make sure you recognize that breakout leg. That's the key component to finding the next final target as we go higher here. I would definitely be on the lookout for a range here. We saw a range here. It wouldn't surprise me if we end up kind of slipping into a range here. Not a lot changes, really at that point. Want to go up. There really isn't a lot of momentum for these bears right now. If the market was, for example, red hot, down into a trading range right now, if it was really strong going down, I would say wait for the pop and just simply, sell into a buyer failure, right? Something like this, right? Really strong move down, right? Wait for the pop and short into that failure. Again, we don't have that right now. So what I'll be doing is waiting for the 2 try failure. Right? When momentum isn't that great, it's like it's kind of slinking down like that, right? Not a lot of momentum. Pop up, right? Get those buyers again. Get us into some of these areas of resistance. Get those buyers to come in, right? Try a couple times. If I have enough space, I'll simply sell into stop losses. If it kind of tumbles back down like that, right? That's when you go in for the trap. Right? The trap, of course, again, because you don't want to sell very low, right? We wait for it to pop up, give the buyers a couple times, right, to grab it. If it really sinks back down quickly, grab the trap. If it kind of sticks up there for a while, right, grab that failure off the high there. That's the way you want to trade this as the market, right, pops up off of that range here. The big problem right now is, can we break that low? Can we break that low here? Again, we talked about the 1, 2, 3, mark that new channel, sell that channel top, right? We talked about the strong leg, shallow pullback, lower low, traps, baby, right? One of my favorite trades right now, right, is that 2 try breakout. We talked about that, right, that jump and that grind going lower, right? We mark up that low, mark up that high, right? Find those, right? Find that trap, that failure, that pullback combination. What else can we use here? We can use that wedge to our advantage, right? Let's flip it into resistance now. Strong move down, moving average follows up. Right? Remember, anytime we see a strong move in one direction, what do we know? We know that's almost a guarantee we get a pullback and a retest of that low. Anytime we see a strong move in one direction, we know it's very likely we get a pullback and a retest of that low, right? So if I see a real strong push down here now, what I'd like to do is find that prior swing, see if I can get us up, right? Preferably up well above the moving average. At that point, hopefully that little V bottom will attract enough buyers who think this thing's going to go back into that range overhead. The problem is, though, is that you don't want to do anything on that besides get short, right? Because that very strong move down here. Now, this trend line may continue. It may pop up like this, and we go 1, 2 back down. But usually what will happen is it'll hit that prior swing low, right? And you'll get those buyers foolishly trying to buy that pullback. I made that mistake all the time when I was a rookie, right? It would run lower, it would pull back so sharply that I'm going, oh shoot, we're reversing here. And sure enough, right, I try to grab that first pullback, and all that momentum just drags you right back down. Remember, that breakout leg, yes, that is the measuring leg, right? That's your next objective as we go, right, as we go lower. So keep that in mind with that breakout pullback. So now we've got a pretty good handle on, 4 different potential breakout patterns as this market, if this market could successfully break through that 16,160 here. And we'll see what we get tomorrow. Remember, CPI report, 8:30 Eastern time. That is definitely going to be the big variable for us here in the trade room tomorrow morning. How about some oil? Wrapping things up here on the black gold, the Texas T, the crude oil futures, right? We got what's going on right now on the oil. Well, isn't this a good example of a breakout leg being a measured leg, right? We've got this trading range, of course, where the day began this morning, right? We get kind of this 1, 2, right? That big push up right there. That is, chances are, going to be seen as your breakout leg. And surprise, here we are sitting right at that measured move right now. So pretty obvious right now. The buyers are very high up. They're very much in control right now. The buyers certainly have control over this trend. The buyers would love to get, if I zoom out a little bit, the buyers there's definitely no shortage of tops up here. You'll notice, right? Big top right here, right? 8604 is that 2018 high. So definitely not a 10-year high, right? What is it? 2025 just yet, right? What is a 7-year high there, right? Something like that. So, excuse me, right? 3-year high there. So we definitely have, there's some definite targets there, right, as we go higher. Yeah, was that 15-year high up there? Luckily, I'm not a calculus teacher. That is for sure. I'll stick to the trading here, Joe. So we got the 2018 high there back from October, a couple of years ago. And, we're very bullish right now. Big, strong push, right? Big, strong push going higher. Anytime we see a big, strong push in one direction, we know the odds are pretty good they're going to pull it back and give us another shot here to do it again. What I would like to do is I'm kind of waiting for 3 different types of pullbacks right now. There are really, let's see here, 1, 2, 3, 4. There are 4 kind of situations that you want me ready for. One would be the melt up, right? Because, right now there probably is some FOMO. People probably can smell that high up there, just like the S&P and the Nasdaq did last week, right? We might get some FOMO, might get some melt up. So we'll talk about how to trade it if it melts higher here, won't pull back for us. We may also see a range here, just because the market began in a range, sprints up, may go into a range. We want to make sure we're ready for that here for tomorrow. And then I've got 3 different pullbacks. Right? 3 different types of pullbacks I'm watching for. 3 specific types of pullbacks. You're going to love those. And then the other one would be the reversal, right? Trade the reversal. It's a couple reversals ready for here for tomorrow. What if we keep grinding higher, right? What if we keep grinding higher? If we keep grinding higher here, now what I'll do is I'm going to draw that channel a lot steeper, right? A lot steeper. Find that steeper channel. And just before, right? Wait for those traps. So use a different color here, right? If we do, let's say, right, we grind higher, right? Something like that. We pop up, we start to grind, right? We're grinding higher. We're not pulling back, right? We're melting higher. At that point now, I take out my trusty channel. I find those traps, right? Those traps into those failures, into those pullback combinations, right? Remember, anytime we see this much strength, it's a big bullseye right back at that high, right? So if it does keep on grinding here, right, keeps on melting higher here, find that nice tight channel, find that trap, failure, pullback combo. You'll see hundreds of examples of that inside that free quick start class that I mentioned earlier. That'll be the way you want to trade it as we go high. If we go higher here, what if we turn sideways here right now? Right, and it could be here, it could be here, it could really be anywhere. If we go sideways here, what's a range going to do? A range is a magnet. What do the buyers do when it goes sideways? They find levels of support underneath the range, right? I like prior swings. I like triangle lows, expanding triangles, things like that. They wait for the pullback, okay? And I mentioned earlier, right, because we have all this momentum, once those bears come in and try to get short on that, hopefully they do, we can buy right into their stop loss with a failure pattern, right? I mentioned this to the NASDAQ, right? The NASDAQ doesn't have that momentum right now, so you want to wait for the 2 tries, right? In this case, it's a pretty strong push, right? Pretty strong push higher here. So as it pulls back, trap in those bears with a failure pattern, right? And just buy right into those stop losses. And then 3 different types of pullbacks, right? 3 different types of pullback setups here. What you want to think about with this, and again, we kind of adjust this thing as it goes higher, right, off those lows now. What you want to think about is this. When the market pulls back, the buyers want to retest the high, right? The high is the big objective right now. That's all we know for sure. So as it pulls back, as I mentioned, I think it was last night, if I see a shallow pullback, I'm looking for a trap, right? Shallow pullback, I want a trap. So sometimes what will happen is, right, it'll kind of hang out up there. And what you want to do is you want to try to find that trap entry. Now, again, I'm talking a lot about traps tonight. So make sure you check out that quick start video, because the quick start guide, again, I'll talk a lot more about those, kind of why I like them, how we use them. So you definitely want to use that. Traps are great whenever you don't want to, in this case, buy too high. Or, before we were talking about traps when we went up and had that trend line in the way. Right? Traps are fantastic for avoiding kind of, tight situations, if you will. Then we can also, of course, use your classic failure, right? We pull back, the bears try to get short off the moving average. All of that momentum now says once those bears commit off the EMA, stops are right there, failure, pullback, combination, right? And we can go. And what I'll do is I'll take some profit off of the high, and then remember, breakout leg, measured leg, right? There's your final target based on the size of that first leg going higher. That makes sense, right? That'll be a pretty easy way to find that target for you as we go higher. And then if we really get lucky, and I say lucky because, that's probably the best way to do it, right? This prior high up here would make for a fantastic area of support. So, if it really pulls back deep, now what's the problem? Yeah, great location, but bad momentum, right? So what do you do if you get a good location? Again, we're not bearish yet. This thing isn't reversed just yet, right? It's still a bull market, but the strength of that pullback is something you don't want to be too aggressive on, because a lot of times, right, the bears will try a couple times and they'll kind of make your life miserable before they end up punching it back to that high. Remember, in that situation, let them try it once, let them try twice, find those stops, right? And then buy right into those stops. And one of my favorite follow-up trades after that, because it's such a deep pullback, is that trap entry. There's always a potential follow-up trade off those failures. The question is, can we get it before we go back and retest the high? Again, it's a 1-2 try failure, buying right into stop losses, using those stops, right, as literally as gasoline, if you will, right, appropriate for this chart, to go back up to retest the high. And then as the market starts to push again, now the FOMO kicks in, right? A lot of buyers won't buy those deep pullbacks because they're scared of a reversal, right? I love it when a market is just about to reverse. That's when you have the best risk reward. That's when you can trap in those bears and use their stops as fuel there. What happens though is once it turns and starts to make that run, everybody says, oh no, I don't want to miss this move. And that trap becomes really, really desirable as we go back up, right, to retest those highs here. So we're going to keep an eye on that. So those are 3 types of pullbacks we're going to look for here on this. And then how would I trade reversal? So we've talked quite a bit about breakouts and kind of reversals already. Here would be 2 scenarios you want to kind of keep on your radar. One would be a crown reversal. Okay, crown reversals are very common around measured moves. What you want to do is you want to wait for the pullback and have the buyers try once and push lower. Okay, at that point right now, you want to wait. Remember, we're very, very bullish right now. So we can't just get short on this. We now want to see those buyers try a second time. And the ideal scenario here is a trap off that high, right? Or at the very least, a channel test of kind of that hidden channel, right? Makes sense? Right? So we go up. Again, we're very bullish, but now the buyers come in, they try to retest the high, they fail. They take it lower, they try it again. Right? Draw that trend line down, right? Good. That's your channel, trap high, right? Channel high, things like that. What you don't want to do is if it goes like this, right? And comes down like this, right? This is going to be the one you're going to want to be careful with, all right? Like this, okay? You're not going to want to sell that one because now you're selling pretty low, okay? If it turns like that, now you want to think about a trap. Okay, this is kind of where it gets a little bit iffy because you don't want to chase it as it goes lower because buyers are going to buy down, remember, right? So remember, think about 1, 2. Now, again, if I can get it and go like this, 1, right, 2, then yeah, now that's right. That is a trend line I can get down with. I'm selling nice and high now, right? Buyers aren't buying that. Make sense? I want to make sure you guys see the difference there between those two. Or we simply need to go all the way, right? We don't want to go halfway, right? Or we go 1 and it collapses. There's that 1, 2, 3 reversal. Now it's time to get aggressive, right? Put on the work gloves, right? Find that low, and your job is to sell that first test, right? Maybe it's a bull trap, maybe it's a buyer failure, maybe it's a pullback combination. Again, if you watch the quick start video, if you watch that quick start class linked up in the upper right hand corner, you know what I'm talking about. Right? This is simply a 1, 2, 3 reversal. All right? Or it may pop, right? Grind. You know what I mean, right? We've talked about these already, right? Find that trap, that failure, back down again. Same stuff we talked about throughout the class tonight. We can definitely apply as we go. The bears would love to get back down into that trading range. Absolutely they would. We'll see if they can do it. It seems like right now what is more realistic is a pullback and a retest, maybe a range or a melt up. But I will definitely not shy away from a reversal setup if, as always, we can get the proof on the price action. All right, guys. Thank you so much for joining in tonight. I know we're kind of late on the video tonight, so thanks for sticking around with me. Hope you learned a bunch here on this video. Tomorrow, we're going to do it tomorrow. Tomorrow's a big day. Again, we get some big news tomorrow. And of course, with Thursday being a holiday, everybody's trying to make their holiday spending money tomorrow morning with us tomorrow morning in the trade room. So hopefully I'll see you there with me. We open up at 8 o'clock Eastern time, Monday through Friday. I will see you there tomorrow morning. If not, you better come back and see me tomorrow night on the next edition of our nightly newsletter. My name is Joseph. Thank you so much for sticking around. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.